The rally resumed today on Wall Street. The housing rebound has a lot to do with it. The incomparable Dolly Lenz is joining us live on the set. She's going to talk about whether the real estate market is really back. And folks, a bullish day not just for stocks, but also housing market prices went up. And our favorite housing expert is the incomparable Dolly Lenz. She's about to join us. Now, who is Dolly Lenz, you ask? If you don't know, just check this out.
Home to one of the most powerful brokers in the business.
I've sold over $8.5 billion.
The rich and famous turn to her to get the job done.
Okay, we're going to have 2 unhappy bidders and 2 unhappy other brokers, but such is life.
And now she reveals all.
It's finally time for Dolly. We're talking the rebound in real estate, and does she think it's for real? She's always on top of this market, but how long can the real estate rally last?
Dolly has her finger on the pulse of the New York wealth. I'm going to have lunch with Dolly to see what she's hearing about the rich and their real estate.
You mind if I leave my BlackBerry out?
It wouldn't be lunch with Dolly without at least one BlackBerry.
Be down a little later, but yeah, but
I'm disappointed you only have one.
I can pull another one out.
More signs of life in the housing market. Housing prices saw their fastest yearly gain since the summer of 2006. The S&P Case-Shiller Housing Index rose 0.6% in November, and that's up 5.5% year on year. Also, home builder D.R. Horton reported strong profits thanks to gains in sales, closings, and backlogs. It's the company's best quarter in 6 years, and their stock popped today nearly 12%. So let's talk. Here now is Dolly Lenz, New York luxury superbroker. We also welcome Constant Hunter, former Deputy Chief Investment Officer for AXA Investment Managers, currently a Senior Advisor to International Solutions Network, and Michael Ozanian, Forbes Magazine's Executive Editor and co-host of the Emmy Award-winning Sports Money. Welcome. Dolly, I loved your movie last night. I loved your thing on CNBC last night. I just want to ask you, you got Case-Shiller rising 5.5%. Bigger indexes, government indexes show existing home prices up 11%, and new sales of home prices up about the same, 14%. Is this for real, or are we just bouncing off the bottom?
Oh, I think we're definitely bouncing off the bottom. You know, it can't be for real until first-time home buyers make up the bulk of new sales, right? There's a lot of investors in that new sales number. So until first-time home buyers are confident and make up the bulk of that number, it's not for real.
So when you talk about, you get these, very exotic, beautiful apartments. By the way, my wife and I and our dog walked past the 95th Street property because it's right near where we live. It looks like a beauty. I hope you'll show it to us just to see. But when you talk about these great sales and exotic sales, you're talking high end. We're not, has it trickled down into the middle income people or the upper middle income people?
Well, again, like the first-time home buyer part, that's where it hasn't trickled down yet, right? So people are still renting, still on the sidelines. The rent buy is not quite there yet in terms of the differential. And also employment. You know, again, we keep going back to that. If people aren't secure in their jobs, how are they going to go for a home?
Not enough income.
Not enough income, underemployed, worried about their kids, what's going to happen to them when they graduate college, just all of that stuff. So
you're not really all that bullish. You're just saying you are a great broker and you handle great property sales, but you're saying it's really not spread here and probably around the country, not spread quite yet.
Not spread quite yet. It's stable. It's looking better than it's looked in a long time. Interest rates are keeping that going, right? Low interest rates. But we're definitely not there yet.
Can you get a mortgage? Can you get a mortgage, Michael?
Absolutely, and I think if you don't own a home right now, you're nuts if you don't buy one. I'm very bullish on first-time home buyers. I agree with everything she said about the economy not doing great. But if you look at the buy-to-rent ratio, it's 1.1. At the peak of the bubble, it was 1.8. This is the lowest, the most favorable it has been for home buyers since 2000, Larry. She already mentioned the low mortgage rates. If you don't own a home now, you got to buy one right now. I mean, this is a once-in-a-lifetime opportunity as far as I'm concerned.
I mean, Constance, it is to some extent a bit like the winter of 2009 in the stock market. It's not exactly the same, but you're seeing off the bottom, as Dolly said, you're getting double-digit price action from very low levels. This could run a long time. The Fed is going to stay easy. They're going to keep pouring money in. Mortgage rates are going to stay low.
Yeah, I mean, if we look at this in the bigger context, think about it. There's $658 billion worth of underwater homes. That's about 22%. Now, 5% of those homes I'm sorry, 1.8 million of those homes are only 5% underwater. And that's as of the end of Q3. If we start getting these incremental increases like we've been getting at a run rate of 5.5%, 6.5% a year price increases, if you fast forward to June, you could be looking at a halving of that number. You could have more like 350 billion underwater homes and a number closer to 12, 13% of total homes.
We're working our way out. We're working our way out.
Well, this will have an important impact because, if one, it'll help banks feel more secure about increasing lending because they won't have as many of these bad loans on their books, or they may even start to state their profits on these things. Then you're going to have a situation where more people are going to feel more confident about what they can spend, or perhaps refinancing their mortgage. Again, there's probably another 6 quarters of refinancing.
Another big thing, I just to say quickly, Larry, is if you look at mortgages in terms of delinquent and foreclosed, that total is down to about, it's changed, it's improved.
That's where I was going.
Really, that's a big indicator. That's real.
Particularly in states smart enough to allow the foreclosures to take place and let the free market work. And you got a little slump. I mean, let's see, existing homes, those only 4.4 months of inventory. That number was 8, 9, and 10 months, 12 months before.
Yeah, but it's not really 4.4 months. I mean, there's still a lot of that shadow and whisper inventory that's not listed. So, you know, I think that's more of an excuse as to why volume is low. You know, so, you know, NAR is coming out and saying, well, gee, volume is low because there's nothing to sell. Well, that isn't true.
What about anecdotally, though? I mean, I'm just, I'm not in the business like you, but I've been trying to get my bathroom redone for months, and finally got a guy coming after like over a year. I mean, it seems like a lot of people in my town and stuff are starting to put money back in their home. That seems to be also an indicator that people are having a little more confidence. They're going to be able to keep their home and so forth and get some stuff done.
But then they get their paycheck in January, and their paycheck is smaller than it was in December, and then they rethink the bathroom. You know, I'm not so sure.
But high taxes could actually be good for you.
Well,
people
high taxes
come
were
in and
great
buy
for me.
before the taxes go up.
Oh, December was like the best month ever because of high taxes. I say let's go for another increase.
That's a supply side increase. No, let's not have another increase.
No, kidding.
I want you to have a good quarter, but let's not have another tax hike. Dolly, Constance, and Michael, please stay right where you are. We got some more work to do. Let's welcome back Jeff Kleintop, Chief Market Strategist from LPL Financial, and bring back our panel of investors, Dolly, Lenz, Constance Hunter, and Michael Ozadian. Jeff, welcome back. Let me ask you, you had lousy consumer confidence numbers today. And in fact, the last 3 numbers, November 71, December 67, January 59. I don't know what that means because the stock market is looking right through it. My question to you is, what does it mean on the consumer side, and how long can this rally continue in stocks?
Yeah, well, you know, it did coincide in January with those tax increases, right? So certainly people really feeling it, but not so much showing up in the stock market. There's a lot of momentum there because the tail risk has come out of the equation. This isn't about our day-to-day feeling better in terms of more incomes or more business spending, but we've taken that extreme risk of the cliff, of maybe a policy development in Europe off the table. That's helped lift stocks here. But now that we're at this big round milestone of 14,000, could take us a while to digest that before we continue higher.
Yeah, I guess just to re-ask it. You know, you get bullish. I'm optimistic. I think the economy might be a little stronger than the average Joe thinks. Okay, that's just my take. How far can this rally go? I know there are going to be corrections and pullbacks, but how far does this rally go as you look out the horizon?
You know, I'm a little worried, Larry. I think we might need to digest this for a while. I think that, you know, if you look back last year, we hit 13,000 on the Dow. We hit it in February. We didn't break free of it until December. Same thing the year before. We hit 12,000 in February, didn't break free of it till December. I'm worried that this is a longer consolidation. By no means the end of the rally, but I think we could see that. And that's partly because some of it's driven by the don't fight the Fed here, and the Fed could be looking to slow or stop policy towards the latter part of the year. That could keep us in this range.
Dolly, Lenz, strong stock prices help real estate?
Definitely. When people feel richer, they tend to part with their money more readily, so without a doubt.
And does stronger stock prices help real estate where prices are starting to go up and you get the wealth effect in home prices?
Yes.
You got both.
Yes.
You got double barrel here.
Yes,
Why-
and the
why
low
can't-
interest rates, so all
Right.
perfect storm.
So I think that, I think that's like a perfect combination.
Oh, there's no question it's a perfect
I mean,
combination.
I think it's good for stocks. I think it's good for, until something really mean and nasty comes down. If we're going to have massive tax hikes every year, I might have a different view because I'm a supply sider, don't think taxes help the economy. But you got easy Fed, you got low interest rates, whether that's good or bad, who knows? I'm just saying right now, easy Fed, low rates, stock market wealth, housing wealth. I think that spells a stronger economy, which then revolves into better stocks and homes.
And I would say there's two other things to that, too. There's what's going on with the oil and gas boom. That's looking to add 30 to 50 basis points this year. And we're having a CapEx cycle that's reasserting itself. So if you look at the durable goods number yesterday,
Big number.
But
Big
if you
number.
look at it on a Q over Q annualized rate, you are looking at new orders ex transport up 15, new orders ex defense up 12, machinery orders up 35, computer equipment up 14. These are big numbers on an annualized
So
basis.
why are we more optimistic?
Well, because we have global money printing, Larry, as we see in the high price of gold. But I would still play this market with, we're talking about real estate in the last sector.
Gold's fallen almost $400.
It's a race to the bottom. But listen, I would play this with commercial REITs. I like RJL Lodging. They own like Marriott and Hilton hotels. I think that's a way to play the rebound in the commercial real estate market along with the stock market. I like that. What concerns me are those financial whizzes over in the Eurozone who now want to impose a new tax on securities trading. That I'm more concerned with
But we'll get
than
the
I am
business
the
here.
sequester.
We'll get the business.
But if you're trading here,
Here in London.
you're still
Yeah.
taxed. That still bothers me. If one person is just in the Eurozone, even for the U.S., you still get taxed. And I think the saving move could be if we follow what Richard Fisher suggested and break up the big banks. Because they have all those excess reserves at the Fed. Get those banks lending again like the small banks. That would be a lot better for the economy.
Did the rise in the capital gains tax hurt your business?
No, because I think it was lower than expected. Okay, I think
Right,
that
not
it
as
was
bad.
only 5%.
Right.
They expected it to be up to 20%. So I think people were happy, in fact. Expectation, right?
All right, so it doesn't bother. If they raise it to 25 or 30%, you're going to have a problem.
Exactly.
Jeff Kleintop, I guess the case I'm trying to make, and I'm not going to win tonight, is that I think this stock market rally can go on for quite some time. We're just making up for lost time. We're getting back to the highs of 2007. But we got to make new ground, Jeff. The nature and history of the stock price movement will continue. Why can't this thing go on for another 5, 6, 7 years?
Oh, I think it will. I think it will go on for another 5, 6, or 7 years. I think 2013 is a turning point for individual investors to come back to stocks that they've avoided for the last 5 years with just selling after selling after selling. This is a turning point of the year, much like maybe 1984 was, where you had a low returning year, but you had a turnaround. Individual investors coming back. You had 85 and 86. We had a hiccup in 87, but you had a long run of very good numbers through the end of the decade. That's what we could be on the cusp of here. This is a year to get invested, not to avoid stocks, but don't expect a big year this year. Those are still to come.
There'll be corrections. There'll be pullbacks along the way. But we could be at the beginning of a really long run. Anyway, Dolly, Lenz, Constance Hunter, Jeff Kleintop, Michael Ozanian, thanks to all of you. You're terrific here. That's it for tonight's show. Thanks for watching, everybody. I'm Larry Kudlow.